Good morning. Happy Thursday. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Scott Bessent feeds the rally as Treasuries gain and US stocks close at another record high. The Treasury Secretary tells Bloomberg interest rates should be up to 175 basis points lower. Talking tough, Donald Trump warns of, quote, very severe consequences if Russia's Vladimir Putin does not agree to a ceasefire at tomorrow's summit. Plus, Apple's AI comeback. Bloomberg learns the tech giant is planning to introduce an ambitious slate of new devices, including robots, a lifelike Siri, and home security cameras. So a second consecutive record high for US stocks. A bit of a breather right now across these equity markets. There's a sell-off that's taking place in Japan. There's a stronger yen. There's the comments, of course, from Scott Bessent, the US Treasury Secretary, targeting, of course, the BOJ. And that is a crucial factor for us today. European futures right now largely unchanged after gains of 0.5% across the benchmark by the end of the close yesterday. 3100 futures here in the UK as we build up to the latest GDP print at 7 a.m. UK time, currently pointing higher by 0.1%. S&P futures, again, after that second consecutive record high, currently flat, just down 0.1%. A bit of a breather, maybe waiting for the retail sales data that drops on Friday out of the US. In terms of the US 10-year, you saw that move into US Treasuries yesterday as markets continued to bet that September is locked in for this Federal Reserve. And Scott Bessent, of course, the Treasury Secretary, telling Bloomberg that he wants to see rates 150 to 175 basis points lower, so potentially sub 3% by 2025. 423 right now on the benchmark US 10-year, relatively steady after the gains for Treasuries yesterday. Euro dollar at 117, Brent closing into $66 a barrel, and Bitcoin breaking through fresh record highs, up 0.1% so far in the session at 123,000. It crossed 123,500, making a fresh record high. The ETF flows continue for the biggest market cap crypto. Let's get to the Asian stocks then, because there's some interesting developments in terms of what's happening in Japan and also question marks about the AI story in China. Mimilo in Hong Kong with a check on the Asian session.
Hey Tom, yes, it is a sea of red today. After a few days of pretty good sessions here in Asia, the MSCI Asia Pacific down 0.2%. TAIEX is off by about 0.3% after flirting with record highs yesterday. But the big loser today is the Nikkei 225, off by 1.5%. And that's because of the big move in the yen. Scott Bessent saying that the BOJ has been behind the curve in addressing inflation and rate hikes. So the yen, we are now at the strongest levels in about 2 weeks, trading at about 146.42 levels, and that's a drag on the export-heavy Nikkei. And elsewhere in Asia, China, quite a different picture here, and that is despite the credit data that we got out of the PBOC yesterday showing a contraction for the first time in nearly 2 decades. Really, borrowing sentiment for borrowing really very weak there. But the equity markets, the interest in the equity markets is very, very strong because we are seeing turnover volume hitting above 2 trillion yuan. That's close to the levels that we saw during the DeepSeek moment. And a lot of it is because of the optimism around earnings. Tencent reported yesterday it's up 1.4% or so. It was a very solid second quarter for the company. The CSI 300 up 0.5%. But yes, some questions around the AI sector because FT is reporting that DeepSeek's reasoning model, its updated model, is facing some delays after the Chinese government asked the company to use Huawei's Ascend chips instead of NVIDIA's H20 chips. And here you can see the Hang Seng Tech is off by about 0.5%. But it's trading a little bit mixed at the moment because there are a lot of things going on in the tech sector today. There are earnings, Tencent is up, Alibaba is probably down because of the competition in the food delivery sector. So a little bit mixed here, but yes, a bit of question when it comes to the self-reliance push from Beijing.
OK, minimum low with a check on the Asian markets and question marks maybe around the AI theme in China. Joining us out of Hong Kong, Min, thank you. Let's get to breaking news right now in terms of the earnings story. The insurer and reinsurer Swiss Re coming through with a solid beat in the first half. Net income coming in at $2.61 billion. The estimates had been for just shy of $2 billion. So a solid beat in the first half on net income for Swiss Re. First half return on equity of 23%. We know the analysts are looking as well potentially whether or not there's more they can do in terms of distributing back to shareholders via, of course, buybacks or dividends. So we'll watch for any commentary on that. They still see full-year net income above $4.4 billion. The stock up about 20% year to date. We will be speaking to the CEO of Swiss Re at 8:45 a.m. UK time. So tune in and stay tuned for that interview. To the industrial space, and a company exposed to the auto sector, but nonetheless has been up around 150% year to date. And ThyssenKrupp, a different story though. Despite the run up in the stock, the earnings coming through, and it is a miss when it comes to third quarter sales for ThyssenKrupp. In the third quarter sales coming in at 8.2 billion, below the estimates, and they see the full year earnings at the low end of 600 million euros, 600 million euros to 1 billion euros. So they see the full year earnings at the low end of that range, between 600 million euros to 1 billion euros. In terms of third quarter adjusted earnings, also a miss, coming in below the estimate. So a stock to watch at the open, of course, 8 a.m. UK time. ThyssenKrupp with a miss in terms of the top line on the earnings. Let's get to the broader picture and what we've been hearing from the US Treasury Secretary Scott Bessent, of course, urging the Fed to cut interest rates by up to 175 basis points.
We should probably be 150, 175 basis points lower. So, I think the committee needs to step back. I think probably one of the most politicized governors just went off the board.
Let's bring in our markets reporter, Valerie Teitel, right now for the market reaction to this. And Val, this is Scott Bessent taking the clearest aim at the Fed in terms of his calls for lower rates and putting a number on it.
Yeah, 150 to 175 basis points lower. That's where the Fed funds rate should be in Scott Bessent's mind. This did allow the Treasury market, Tom, to have its best session in over 2 weeks. We saw those fall in two-year yields still continuing from yesterday's data. Now, this adds to the already nearly fully priced cut that we have in September. You can argue the market is starting to basically have the first hints of pricing in a supersized cut when it comes to that September 17th Fed meeting. We also heard from President Trump, though, weighing in as well on wanting lower rates. He called for rates to be 300 to 400 basis points lower. So it seems like the Treasury Secretary and the U.S. President both pressuring interest rates just on a different magnitude. We're getting the same kind of thing when it comes to the Fed chair pick, with Trump saying that they want to name the candidate a little early, saying they've narrowed it down to 3 or 4. We had Scott Bessent yesterday, though, adding another 3 to that list, focusing more on the private sector here, Tom. The big heavyweight being Rick Ryder, who is the head of fixed income at BlackRock, to that list.
And, of course, the pressure on the Fed, part of the catalyst, part of the moves, part of the feed into higher, again, for these equity markets. A fresh record for the S&P 500. Bit of a breather right now in the session, Val. How are things shaping up? This is a risk-on mood despite the pause that we're seeing in the session today.
Risk-on mood across assets, Tom. A 17th record for the S&P 500 yesterday. We do have some more catalysts, though, ahead. We've got PPI today, retail sales tomorrow, possibly another jolt to this equity market. But take a look at the VIX. Again, hitting another year-to-date low in yesterday's session. This has been the theme since that CPI print, Tom. Implied volatility is dropping across assets. We're just less worried about the impact of tariffs at the time being, and that's allowing speculative assets to also take a leap forward. Take a look at the price of Bitcoin. It breached 124,000 in the overnight session, a fresh record for the world's favorite digital asset.
Yeah, the grind high for Bitcoin has been pronounced, hasn't it? Very few signs that that's going to be derailed anytime soon. Those ETF flows have been in focus as well. Bloomberg's Valerie Teitel, thank you very much indeed with the touch on the markets. And, of course, the commentary from Scott Bessent, the Treasury Secretary. Meanwhile, on geopolitics, Donald Trump has warned Russia will face consequences if Vladimir Putin does not agree to a ceasefire with Ukraine in the coming days.
Yes, they will. Yeah.
What will those consequences
there will be
be?
consequences.
Sanctions, tariffs?
There will be, I don't have to say, there will be very severe consequences.
Well, that message comes after European leaders stressed to the US president that Ukraine needs robust security guarantees to ensure that any deal holds. Bloomberg's Kriti Gupta is here. We are a day away then from this crucial summit in Alaska. There's palpable concern, there has been amongst European leaders, that this is a summit that could involve Trump essentially being rolled by President Putin. The commentary after this, the sounding that we've heard from European leaders suggests that they feel that they have landed their point with the US president. Where does this conversation go? How convinced should they be that the US president is really taking on board those European and Ukrainian concerns?
It's been a positive couple of hours, I think, when it comes to what the European leaders are able to in terms of really influencing the United States president, given that it's already a massive diplomatic win for Vladimir Putin to even come onto U.S. soil, not even through in Anchorage, Alaska. There are three key things that Ukrainians, but also European leaders broadly, have been pushing for. The first, of course, is a ceasefire altogether, no territory cessation, and then three, when it comes to the actual U.S. backstopped security guarantees. And that doesn't necessarily include continuing with aid distribution, which the United States is still very much contributing to on the war front. It includes things that should the war escalate, you do have the backstop of the U.S. military, even if that aid does actually continue. There are other things on the table, including frozen assets, reconstruction, et cetera, lots of other things. But for now, it is actually positive in terms of what we got, simply that there might be a second meeting on the table between Donald Trump, Vladimir Zelensky, and Vladimir Putin. And that in itself is a win. That maybe if Vladimir Zelensky can't be represented directly at this meeting, maybe there's one that comes very in quick succession.
And that, of course, would be historic and remarkable. And certainly, as you say, something that President Trump has suggested he will be pushing for. What are the other outcomes that the White House is steering us to in terms of this summit? Is it clear as to what President Trump specifically wants to get out of this at this point?
Well, look, I think this has been, although it began as a ceasefire agreement or ceasefire negotiation, if you can, it has evolved into a series of other concepts. Because remember, this is also turning into an economic story between India, China, and the United States as well. This is no longer just about the United States and Russia dynamic, because Donald Trump has basically said that for the countries that are helping Russia, you are going to be penalized in the form of the U.S. economic powerhouse that he controls. And that piece is where you start to look at the U.S.-Russia relationship and not just the Russia-Ukraine relationship with the U.S.'s backing. And the idea of actual nuclear warheads, nuclear submarines, those kind of things are likely to enter the conversation simply because in the last 5 years or so, a lot of the standing agreements from the Cold War have dissipated. So that kind of nuclear security guarantee between Russia and the United States is also crucial here. So there are a lot of geopolitical analysts who are saying if Vladimir Zelensky is not in the room, maybe other topics could come up.
Yeah, and really interesting to see, of course, that President Trump has put in place those tariffs on India, but as yet not on China, which actually buys more Russian oil than India does. So that's an interesting component to think about as well. The president saying, of course, in the run-up to his election that he could get this solved in one day. Bloomberg's Kriti Gupta, the anchor of the opening trade, with a preview of that crucial summit in Alaska taking place tomorrow. Kriti, thank you. Here's what else to think about then. Today, UK's second quarter GDP will drop at 7 a.m. UK time. We're going to get a preview of that as there are concerns, of course, about the slowing growth picture and still high inflation here in the UK. So that data point dropping at 7 a.m. We will give you some analysis through this show as well. Prior to that, US producer prices drop as well. So that core element that feeds in to the PCE gauge that we know the Fed scrutinizes, that data out later today in the US. So producer prices dropping out of the US to round out the picture on inflation after that more benign CPI print. And US initial jobless claims. We know there is now some softness that is working its way into the labour market of the US. What will the print tell us today? 226,000 is the view or thereabouts for the most recent print when it comes to jobless claims. Continuous claims as well will be scrutinised. You can get a roundup of the stories you need to know, of course, to get your day going in today's edition of Daybreak. Terminal subscribers can go to D8YB Go on the terminal. And, of course, you have a deep dive set of analysis and reporting leading up to that presidential summit in Alaska, Putin and Trump on Friday. Coming up, investors to receive another UK economy health check, as I mentioned, with second quarter GDP figures due today. We will get that preview next from Bloomberg's own UK economist. Coming up, this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the BOE and investors will get another check on the health of the UK economy today, with figures expected to show the economy slowed sharply in the second quarter, with GDP growth easing to a meagre 0.1%. We are joined now by Dan Hansen, Chief UK Economist for Bloomberg Economics. Dan, the government came in, of course, promising growth. We're not getting much of it. What do you and the team expect?
Yeah, morning, Tom. So, yeah, we expect a 0.1 reading as well. And what we've had over the course of this year, we've had this very sharp rise in GDP in the first quarter. And then in the second quarter, as you mentioned there, we're going to get this 0.1%, we think. Some economists think it might be 0.2. Some economists think it will be flat. And the reason for that is that we had this big bringing forward of activity in the first quarter. So we had the tariff announcements that forced or prompted manufacturers to bring forward production. We also had some tax rises here in the UK on vehicles and on property that prompted activity to be brought forward as well. So what you've got is this sharp rise in activity in the first quarter. We got a 0.7%. Second quarter, 0.1%, which is much weaker. And I think probably a bit more indicative of the types of growth rate we're going to see going forward over the remainder of the year. Maybe we'll get some 0.2s and 0.3s. So that's what's been happening. And I think you probably need to take the first and second quarter together to get a better sense of where the economy is.
OK, so we'll put those two numbers together. Do we also factor in, Dan, do you and the team factor in what's happening in terms of the pull forward of rate expectations, rate cut expectations for the Fed, and the read across to the BOE? There's not a full cut priced in for the Bank of England again until what? November, and even then we're kind of 50-50. Does that dynamic start to change if the Fed goes big in September?
Yeah, I think it does. I think that's one thing that could really change the dynamic for the Bank of England. I think if you've got the Fed going hard and the Fed worried about the US economy, if you just look over history, the rate cycle of the Bank of England and the Fed are very, very well correlated. Now, that doesn't mean the bank has to follow the Fed, but it's just one more reason and gives them an opening to move, and particularly the doves on the committee, who I think are looking for a reason to cut rates a little bit further. We obviously had a very hawkish, or pretty hawkish outcome of the August meeting. So there are domestic factors pushing back against that pull from the Fed. But I think you're absolutely right. If the Fed changes course and does decide to start moving lower from September onwards, I think, yes, that does open the door and perhaps give the bank perhaps room to do one more this year. That's still our call, the November cut, as you just mentioned there. But, you know, investors have gone a little bit cold on it. It's 50-50 at the moment. The next cut is fully priced for February next year. I think the other thing domestically we'll be watching is the budget. You know, if we do get big tax rises, that's obviously another reason to think you might need lower interest rates.
OK, tying it all together for us brilliantly as ever. Dan Hansen, Chief UK Economist for Bloomberg Economics. He and the team, of course, will be across that data, dropping at 7 a.m. UK time on the GDP print of the UK. Coming up, more from the US Treasury Secretary Scott Bessent. He's moved the markets in his conversation with Bloomberg on the yen and, of course, on US Treasuries. We'll bring you that conversation after the break. This is Bloomberg.
Next week, Bloomberg is live at the Jackson Hole Economic Symposium, bringing you news and interviews with Fed leaders and other economic experts. Tune in for continuing coverage leading up to a special episode of Surveillance, August 22nd at 9 a.m.
Welcome back to Bloomberg Daybreak Europe. Treasury Secretary Scott Bessent making his most explicit call yet for the Fed to begin a cycle of deep cuts to US interest rates. Speaking to Bloomberg TV, Bessent said the current central bank leadership has been taking too much of an old-fashioned approach to monetary policy.
President Trump is very good at giving these nicknames, and I think the reason that the Jay Powell gets the nickname too late is because he wants to go into a series of rate hikes. He's not willing. He's not Alan Greenspan, who was very forward thinking. They try to be more data driven, which I think is a mistake, because I think we are going back into an economy like we had in the 90s. So, you know, it's just very old fashioned thinking. But I do think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September.
A 50 basis rate cut in September, does that signal that the economy, though, is not doing well?
That signals that there's an adjustment and the rates are too constrictive. If you look at any model, that we should probably be 150, 175 basis points lower. So, I think the committee needs to step back. I think probably one of the most politicized governors just went off the board, and that she was very, very political, I believe. And I think that
what did she do that gave you that impression? I'd love to know.
Sorry?
I imagine you're referring to Governor Kugler. What did she do that gave you that impression?
I think there's a lot of inside baseball. And look, Governor Kugler, you read what she was saying when Kamala Harris was running, that we needed rate cuts, we needed this, we got to foam the runway, and then all of a sudden it was hard to know whether TDS was a Trump dementia syndrome or Trump derangement syndrome or tariff derangement syndrome.
You get the opportunity to remake the Federal Reserve. The president gets the opportunity to reshape the Federal Reserve. And I'm not talking about the remodeling that maybe the current chairman's going through. We'll talk about that another time. I want to talk about the complexion and character of the committee. The changes that you're making at the moment, Stephen Myron, let's start with Stephen. How quickly can you get Myron confirmed?
We'll see. The president has great sway with Leader Thune. Leader Thune's been a great partner during the tax deal, and I think that he would like to see Stephen, who I've known for a long time, get on there as soon as possible. So I'm hopeful about the September meeting. And Jonathan, the president's concerned about the building and those massive cost overrun, which just tell you that there is no accountability at that organization. There's no oversight in terms of the spending, but the president and I are both concerned about the foundations of the Fed.
US Treasury Secretary Scott Bessent speaking to Bloomberg's Anne-Marie Jourdain and Jonathan Ferro. He also took aim, of course, at the BOJ, saying they were behind the curve in terms of raising rates, and that saw a big move, of course, and we'll continue to see that in the Japanese yen and downside pressure on Japanese equities, part of the Asia market story today. Some other stories we are watching this Thursday. Shares of cloud computing provider CoreWeave tumbled after it reported a quarterly loss 20 times bigger than last year's. Its third quarter operating income forecast of up to $190 million also underwhelming investors after a near quadrupling of its share price since its March debut. The results raise concern that a rapid AI data center expansion is pressuring profit margins at the business. Amazon plans to offer same-day grocery delivery in 2,300 cities by the end of the year, more than doubling the current number. It says customers will be able to order perishable items alongside frozen foods and household goods. The same-day grocery delivery service will be free in most cities for Amazon Prime subscribers on orders over $25. And Oracle is cutting jobs in its closely watched cloud unit, taking steps to control costs amid heavy spending on AI infrastructure. According to our sources, impacted workers were informed this week that their roles were eliminated, with some of the cuts related to performance. There's plenty more coming up, with markets treading water right now after a fresh record high for the S&P 500. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Scott Bessent feeding the rally. As Treasuries gain and US stocks close at another record high yesterday. The Treasury Secretary telling Bloomberg interest rates should be up to 175 basis points lower. Talking tough, Donald Trump warns of severe consequences if Russia's Vladimir Putin does not agree to a ceasefire at tomorrow's summit in Alaska. Plus, Apple's AI comeback. Bloomberg learns the tech giant is planning to introduce an ambitious slate of new devices, including robots, a lifelike Siri, and home security cameras. To the markets right now. AI is a feature as well, certainly in the Asian session, with reports that DeepSeek has delayed its latest model on the challenges around trading it on the back of Chinese-made semiconductors. So that is a broader story for you. Right now, equity markets taking a bit of a beat after a bit of a breather after the records that came through. Fresh record highs, consecutive records for the S&P 500. European futures, after gaining around 5 cents yesterday, currently pointing a little lower by 0.1%. FTSE 100 futures are largely flat. We're waiting for GDP data that's going to drop at 7 a.m. UK time. S&P futures then down 0.1%, but again, in the context of that fresh record high yesterday. Nasdaq 100 futures pointing lower by 17 points. Let's flip the board and have a look cross-asset. You did see money moving into Treasuries. Treasuries were bid yesterday, and Scott Bessent helping to fuel that rally, of course, with yields down about 5 basis points on the benchmark 10-year. Some stability in the Treasury markets today. 4.23 on the benchmark 10-year. Euro dollar slightly softer on the euro at 1.16, still close to that 1.17 level. And Brent a little higher on oil, up 0.3%, close to $66 a barrel. Bitcoin smashing through a fresh record high. It reached $124,000 per coin. Right now, just a little softer by 0.2, but still above 122,000. Let's get a tech now on the Asian markets. The yen in focus, Japanese equities under pressure, and of course the deep-seek story as well. Min Min Low standing by in Hong Kong. Min Min.
Yes, stocks pulling back across most of Asia. The Kospi, the Nikkei, the TAIEX. Probably the only exception is onshore in China. But here we're taking a look at the currency because the yen is seeing very big moves today, strengthening by about 0.5% after Scott Bessent mentioned that the BOJ is behind the curve in addressing inflation and hiking rates. So we're now trading at about the strongest levels in around 2 weeks, 146.56, and that's a drag on the export-heavy Nikkei index. But elsewhere in China, we are into earnings season right now, and you look at the earnings forecast recently, it's been hitting pretty high levels. If we flip the board, it's close to the levels that we saw in 2022. We're not quite there yet. You can see quite a bit of a gap, but still the trajectory is going up, and perhaps this is what is fueling the interest in the Chinese equity markets, because turnover onshore has been topping 2 trillion yuan. That's very high levels, close to the levels that we were seeing during the time of the deep-seek moment, and that is despite the weak data coming out from the credit data from the PBOC, where we saw a contraction for the first time in nearly 2 decades. Both corporates and households are focused more on paying back their loans rather than taking out new loans. But we're also keeping an eye on the tech sector in China. Here you can see the Hang Seng Tech down by about 0.8%, pretty big losses today. That's after FT reported that DeepSeek is facing delays in the development of its new reasoning model after the Chinese government asked the company to start using Huawei's Ascend chips instead of NVIDIA's H20 chips. So casting a little bit of a doubt over China's self-sufficiency push. But elsewhere, you can see Tencent up about 1% or so after the strong second quarter earnings that it reported yesterday, but pretty mixed overall here. Alibaba probably down because of earnings season as well. There's profits that are being hit across the sector in the among the food delivery platforms because of the intense price competition there.
OK, Min Min Low in Hong Kong with a check on the Asian markets. A number of key stories working their way through the equity story, of course, and the equity picture of Asia right now. Part of that, as Min Min was saying, was the commentary from the US Treasury Secretary Scott Bessent speaking to Bloomberg and saying that the BOJ is behind the curve. He also said that the Fed needs to cut interest rates by up to 175 basis points. His remarks go well beyond indications, of course, from the bond market. For more on the market moves, let's bring in Bloomberg's Valerie Taital. Valerie, how are markets adjusting and reacting to the commentary and pretty straight call there from the US Treasury Secretary, and pretty unusual.
Yeah, rates should be 175 basis points lower, coming from the mouth of the US Treasury Secretary. It is allowing the front end to really be confident about pricing in a 25 basis point cut at the Fed September meeting. The rally yesterday had us fully pricing in that September cut. You can argue we're almost basically hinting at pricing in that 50 basis point cut that some commentators have called for as well. We also heard from President Trump. He weighing in in on monetary policy, saying that rates should be 300 to 400 basis points lower. So while they differ on the magnitude, they're both pushing quite aggressively for lower interest rates. They also differ a bit slightly when it comes to what's going on for the search for the new Fed chair. Scott Bessent added 3 or 4 names into the mix yesterday, most of them focused on the private sector, with the big heavyweight of Rick Ryder from BlackRock added to that list. Trump, on the other hand, says that they're down to 3 or 4 candidates, and he wants to name the candidate a little bit early. So still a bit of confusion about what's going on, but it does seem to be that Scott Bessent is in charge of the first round of interviews.
And for now, Val, on the equity markets, a bit of a breather after a fresh record high for the S&P yesterday.
It's a bit of a breather today. We did notch another record high yesterday, and there are a few risk events on the horizon that could possibly dent this equity market rally or help it out a bit further. We have PPI today. Tomorrow we have U.S. retail sales out of the U.S. for a read on the consumer. That could be the possible next thing to jolt this equity market. But the key theme this week has been volatility declining across assets. We had the VIX hitting a new, fresh year-to-date low in yesterday's session. So the market is just less worried about the impact from tariffs after Tuesday's CPI print. It's also leading to quite a rally in speculative assets. As you mentioned before, Tom, we saw Bitcoin reaching a fresh record high in the overnight session, notched 124,000 for the first time ever. Tom.
That's very hotel. Thank you very much indeed. For the macro to the micro right now, one individual company coming through with earnings, and it's a miss for Adyen, the payments company. This is the redhead across the terminal now. Adyen's first half net revenue coming in below the estimates, slightly, but nonetheless, it is a miss. Just over 1 billion euros in terms of first half net revenue for this payments company, below the estimates. And in terms of the full year view from Adyen, now seeing a slightly reduced picture when it comes to full-year net revenue acceleration seen as unlikely. Sees a slight full-year net revenue acceleration as unlikely. That is also a redhead across the terminal. This is a stock to watch for you, of course, when markets open. 8 a.m. UK time. Adyen coming through with that miss on earnings. Let's get to a broader picture in terms of how the luxury sector is shaping up, but with a particular lens now in terms of trends and music. The luxury sector, of course, struggling of late, and that has coincided with fewer mentions of the big brands in popular music. So could analysing songs help investors forecast the industry's fortunes? Hang on a sec. Analysing songs to help forecast the fortunes of the luxury sector. Yes, we are serious, and yes, we've done our homework. Andrea Felstead, in particular, and specifically, has done the hard work on this. Bloomberg Opinion, of course. And this is a fantastic piece. It is really well researched. All the data is there. This is not flippant. This is real. You've been digging into this. There is a serious correlation between the prospects of luxury names and their mentions in songs.
Absolutely. So luxury's been through this incredible boom and bust from roughly late 2020 to early 23, really on a tear. Everyone wanted Gucci bags, Rolex watches. During that time, the mention of brands, particularly in hip-hop and R&B, absolutely soared. And we focused on that genre because it was the one that was most likely to mention luxury brands. But this was across the sector. We had it in dance music and in, popular songs in the Hot 100. And since then, it's really slumped. And that exactly mirrors what's happening in the luxury sector.
Talk to us about which brands in particular. Are there certain brands that are more affected by this trend and some less affected?
It's absolutely fascinating. So Gucci, was on this incredible tear. In 2015, they had Alessandro Michele come in, who relaunched it with these, very ostentatious logos, granny chic. And it's meant...
You call it granny chic?
Granny chic,
granny chic,
logos,
right.
cardigans, floral prints. And its mentions absolutely rocketed. Peak Gucci, 2018, 2019. Absolutely. And it's really struggled. He left in 2022. It's really struggled since then. And it's really fallen off the music charts. We had Prada, which had a comeback. This was actually the inspiration for the piece. And around that time, I started hearing Prada being mentioned in songs. And it really, it mapped exactly the comeback of Prada. Watches are fascinating. Now, we all think, iced out bling, got to be Rolex. Rolex actually peaked in 2014. And since then, 2 other brands, Audemars Piguet and Patek Philippe, have really rocketed. And that also mirrored what was happening. They became very popular. We had this surge in prices. It was Rolex, Audemars and Patek, which really led it. Since then, they have come down. But Cartier, which isn't mentioned as much in songs, but does get some mention, and a lot of men have started wearing smaller Cartier watches. That's really flying. We actually had Taylor Swift the other day wearing a Cartier Panthère watch. So all these mentions in songs actually mirror exactly what's happening in the market.
Is it a forward? Are the songs a forward indicator or a lagging indicator?
Now, this is the thing we were struggling with. So Gucci, I think Gucci was a lagging indicator. When Gucci really peaked, you know, you should have been saying, you know, Kering parents should have said, look, we're at peak Gucci. We need to manage this down. Now, Dior, if you've been anywhere this summer, you'll have heard Dior on the radio.
You're going to hum it for us, Andrea?
I can't get the words out of my head,
okay.
So it's highly likely. Now, Bernard Arnault is trying to relaunch Dior, trying to revive it. They've got a new designer. There's a massive song at the moment, you know my style. When I love Christian Dior, it was #1. It's everywhere. Is that going to help? Is that going to help Bernard Arnault? I'd say yes.
Okay.
It's increased the visibility just at the right time.
So the next time when we come round to the luxury earnings season again, we should be scrutinising whether or not there is this correlation as well. And if we get these plays-throughs on TikTok and elsewhere of these songs, that could drive sales.
And it's got a new designer. The timing couldn't be better.
OK, for Dior, at least. We'll get Andrew on to sing some of these sing some of these tunes at a later date. But there you go. The piece is on the terminal. It's on Bloomberg.com. It is worth your time. It's really worth your time. It's fun, but it's backed up by loads of great data as well. Andrew, thank you very much indeed. Of course, always fascinating insights on the luxury space from Bloomberg Opinion. Now, some other stories making the news this Thursday. Bloomberg learning that Apple is plotting an AI comeback. It's been plotting that for a while with an ambitious slate of new devices. That's the news. A tabletop robot that serves as a virtual companion targeted for 2027. Would you want one in your home? That's the centrepiece of the strategy. The product pipeline also includes a lifelike version of Siri and some home security cameras. The AI-driven hardware is part of the tech giant's effort to get back into the generative AI race and restore Apple's mojo. Its most recent moonshot project, the Vision Pro headset, remains a sales flop. And the design of its best-selling devices has remained largely unchanged for years. Staying with tech, a Chinese company is suing Applied Materials, accusing the US chip equipment supplier of stealing trade secrets. Beijing E-Town Semiconductor filed the suit in a Chinese intellectual property court, alleging Applied Materials poached 2 staff with knowledge of proprietary plasma technology and later filed a related patent. E-Town is seeking around $14 million compensation. And a US appeals court has ruled the Trump administration can cut billions of dollars in foreign assistance funds approved by Congress for this year. In a 2-1 decision, the panel reversed a Washington federal judge who found that US officials were violating the Constitution's separation of powers principle. The ruling is a significant win for President Trump's efforts to dissolve US aid. And leaders from France, Germany and the United Kingdom have threatened to reimpose UN sanctions on Iran if a nuclear deal is not reached by the end of August. The so-called E3 say they are prepared to trigger what they described as the snapback mechanism to reinstate international sanctions on the Islamic Republic. Those sanctions were lifted under 2015's Joint Comprehensive Plan of Action, JCPA, the former Iran nuclear deal, of course, that was ripped up by President Trump in his first term. Now, South Sudan's government has denied reports it's in talks with Israel about relocating Palestinians from the Gaza Strip to the East African nation. The Associated Press has reported the two nations are discussing resettlement as part of a wider effort by Israel to facilitate mass emigration from the enclave. South Sudan's foreign ministry issued a statement describing the claims as baseless. Coming up, Lovable, how the company which allows anyone to build apps and websites became the latest tech unicorn and, on some measures, the fastest growing software startup ever. We talk to the CEO next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, former St. Louis Fed President Jim Bullard says the FOMC will probably lower rates at the next meeting in September. Speaking to Bloomberg, he also warned that high inflation was the biggest disruptor to America's growth prospects.
I think 50 sounds panicky, sounds like the administration wouldn't be that confident in their economic program, which I don't think is the right stance to take here. I think they've got a pro-business program that will fire up the economy after we get through the initial phase of the new tariff policies, which is slowing down the global economy. But eventually, we'll have very strong growth in the U.S. economy, and monetary policy has to be looking ahead and anticipating that. I do think the policy rate's high, but the committee's going to probably lower in September here. You could speed up the pace of a reduction if the data cooperates as we go through the rest of the year and into 2026.
Well, tell us what parts of the economy need a rate cut at this moment. We were just talking with Mike McKee about how Fed officials, too, have been saying that rates look restrictive here. We're not at neutral necessarily when we're north of 4%. Where do we really need those rate cuts?
Well, I just think you would want to be at neutral if you felt inflation was coming down to 2%. That's why I've suggested that we can get 100 basis points lower. But you're looking through this inflation that's still CPI core is still up around 3%. You're looking through that, but still you want to get confirmation that inflation is actually coming down to target in the way that you would like, and so you don't want to be too aggressive because you might have to you might get burned by the data as the committee did last year. So I think you want to get on this path toward neutral, and you want to keep watching the data, especially on inflation. And if inflation comes in too high or starts going up again, that would be the main thing that would disrupt the growth agenda for the U.S. So I don't think you want to get into that hot water if you don't have to.
Former St. Louis Fed President, of course, Jim Bullard, who is seen as being in contention as well. One of the potential candidates being weighed up by the Treasury Secretary Scott Bessent and team, of course, potentially as a nominee for the Fed chair role when Jay Powell steps down next year. Talking and in conversation with Katie Greifeld over in the US, of course. Meanwhile, the Treasury Secretary, Scott Bessent, has been saying that it was President Trump's unique idea to allow NVIDIA and AMD to resume lower-end chip sales to China while paying a 15% cut to the US. This on a day where we've heard, of course, that DeepSeek, the key producer of those models over in China, has delayed one of its latest publishings of its latest model because of concerns and its inability to train on Huawei chips. The Treasury Secretary also told us the deal could favour and could serve as a model. This is crucial. Could serve as a model for other businesses in the future. Take a listen.
The president is one of the most open-minded people I know. He does everything at first principles. Why do we do things this way? Why shouldn't we do it the other way? And, I think that this is a very unique solution, allows NVIDIA to expand into China. It can make NVIDIA chips the bellwether for Chinese technology, and then the U.S. taxpayer gets a share of that.
Keyword unique. Is it unique to NVIDIA and AMD, or is this a model for other companies?
I think we could see it in other industries over time. I think, right now, this is unique, but now that we have the model and the beta test, why not expand it?
What do you say to people who think we're putting a price on national security concerns by basically selling export licenses?
There are no national security concerns here. We would not sell any of the advanced chips. So the H20s, I don't know whether you'd say they're 4, 5, 6 levels down the chip stack. What we do not want here, Anne-Marie, is for Huawei to have a digital Belt and Road. right? So we do not want the standard to become Chinese across the world or even in China.
Well, we have exclusive reporting that Beijing is now sending out letters to firms saying actually shrug off those H-20 and use our domestic champions. Is this something you might discuss with your counterpart?
Sure, we can discuss that, but it also tells me that they are worried about the NVIDIA chips becoming the standard in China. Look, NVIDIA is an incredible product. A lot of the technology in China is, they're piggybacking, and I'll use piggybacking as a kind word for acquiring our technology.
Do you mean stealing?
Your words. And yes, that's what I mean. And the NVIDIA, Jensen Huang, just stays years ahead of them.
Criticism came from the Wall Street Journal editorial board, though, about this new unique policy. They say it's a step toward government control of private business. Are you concerned? Some of these policies are starting to look like the country you're actually trying to de-risk from. Central planning, basically, out of the Oval.
No, not at all. Because where we got was with this unfettered trade, we did not have secure trade or fair trade, and so now we are trying to make it secure. So you don't want to. We're not sending out the highest level chips, and we don't want to sell everything to everybody. So there is a need for intervention.
US Treasury Secretary Scott Bessent speaking to Bloomberg's Jonathan Ferret and Anne-Marie Jourdain, of course, talking about the chips space and that decision to take a 15% cut from sales of NVIDIA and AMD into the Chinese market. There's a lot more coming up. We're going to give you a preview of the US jobs data in terms of jobless claims that drop later today, and check in as well on that Bitcoin boom. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So as we think about the debate as to whether or not the Fed should go 25 or 50 in September, if indeed they do cut for the first time this year next month, we think about the labour market. Jobless claims coming in later today. Keep an eye on continuing claims as well. The opening trade is up next. This is Bloomberg.